In order for the compounding effect to take place, there's a few different things that have to happen. As a dividend investor, yes, you have to reinvest your dividends back into your portfolio, but just as important is you have to invest into dividend stocks that are constantly increasing the amount they pay out in dividends every single year. So in this video, we're going to be looking at 5 different dividend stocks that just recently announced dividend increases. So let's go ahead and jump into it. And the first dividend stock we have here is Costco. They just recently announced their dividend by 13.7%, bumping it up to $1.16 per share. Now, Costco has been a pretty popular dividend stock for dividend investors over the past few years, but it's definitely known for trading at a premium. It has a forward price to earnings of around 45.78, but over the past year, it has performed very well, up almost 50%, trading at around $730.33. Let's go ahead and jump over to my dividend breakdown tab. We'll come up here and plug in cost and hit enter, and you can see all this data is going to automatically load in thanks to the help of the ticker data add-on in Google Sheets. And like always, if you'd like to download any of my spreadsheets and also get access to that ticker data add-on, then you can head over to tickerdata.com at the link in the description. But okay, we can see Costco starting dividend yield sitting at 0.56%. So this is a pretty low starting dividend yield for a dividend payer. Now we can see the dividend growth has been really good. We have a 10-year dividend CAGR at around 11.49% and a 5-year at around 10.12%. But when we come down here and look at this yearly dividend chart, if you don't know anything about Costco, you're probably a little bit confused. What's going on with these huge fluctuating dividend payments? And the reason behind this is because Costco has a big problem. Now, what is that problem? And the problem is Costco has more cash than it knows what to do with. And to show exactly what I mean, let's go ahead and pull in the short-term debt using the ticker data function as of their most recent report. So you can see here with the ticker data function, we're going to automatically pull in short-term debt, and we can see for Costco, it's sitting at about $1.08 billion. But if we do the exact same thing for Costco, except this time we want to pull in cash and cash equivalents. Come up here and again, we'll select it as of 2023 and I'll hit enter. And one of the things you'll notice is Costco's cash and cash equivalents is sitting at $13.7 billion. And again, their short-term debt sitting at about $1.08 billion. So we can quickly see based off a very simple formula that Costco's cash and cash equivalents can cover their short-term debt 12.6 times over. So again, this is a company drowning in cash. So why does this affect their yearly dividend payments? Well, occasionally what Costco will choose to do with their massive cash piles is pay out special dividends. And if we jump over to Seeking Alpha, yes, we can see they have 19 consecutive years of dividend growth. But if we zoom out and look at the past 10 years, we can see what's happening is the same thing. They're paying out special dividends. If we scroll down a little bit further, we can see, again, their most recent dividend hike puts them at $1.16. Previously, it was $1.02. So we can see $1.02 payments in 2023, but they also had a special dividend payment. This is a one-time dividend payment to shareholders of $15. So this is something they have been periodically doing over the past decade. Now, if we look at the payout ratios for this company, we can see the payout ratio for trailing 12 months sitting at about 19.9% and a free cash flow payout ratio around 18.55%. So this is a very healthy and very sustainable dividend. This leaves plenty of capital to do things like reinvest back into the business. Now, the reason they've been able to increase their dividend payout so much while the payout ratio is staying low is because this has all been backed by massive free cash flow growth during this time period. We can see 10-year free cash flow growth, 17.4%, and 5-year free cash flow CAGR for Costco, sitting at 19.18%. So I think you can feel pretty good about this company continuing to increase their dividend payouts at a high rate moving forward. The next stock that just announced a dividend increase is actually one I own in my personal portfolio, and that is JP Chase. And they saw a pretty nice dividend hike of around 10%, pushing their dividend payment up to around $1.15 per share. If we go ahead and jump over to Seeking Alpha, we can see over the past year, they have done very well, up around 42.32%. But over the past 5 days, take a look at this, down around 8%. And they actually took quite the nosedive down on the day that I'm recording this video. Now, why is this? Well, JP Morgan actually reported their latest quarter's earnings today, and the results were actually decent. They did beat expectations. We can see Q1 non-GAAP earnings per share of $4.63 was a beat of around 50 cents. And then we saw revenue of $41.93 billion, which was up 9.4% year over year and was also a beat of $240 million. Now, the problem was they issued softer guidance for some segments of their business moving forward. So as a result of this, again, we can see JP Morgan in the last 24 hours, down around 6.23%. So that's a pretty big nosedive down in just a single day. Now, let's go ahead and look at the company from a dividend perspective. I've already plugged in JP Morgan, as you can see right here. Starting dividend yield is decent, sitting at about 2.51%, and after the most recent dividend hike, that puts them at $4.60 per share there every single year. Now, the payout ratio is what we want to look at since this is a bank stock. For a bank stock, we're not going to necessarily be looking at the free cash flow payout ratio. So payout ratio for JP Morgan sitting at about 27.17%. So that's a pretty healthy payout ratio, and we can see the dividend growth over the past decade has been pretty solid for this company, going from $1.36 all the way up to $4.05 in 2023, and then of course with the most recent hike, $4.60. So the 10-year dividend CAGR sitting at about 11.42%, and it's slowed down just a little bit over the past 5 years, sitting at about 6.87%. The next company that just announced a dividend increase is a dividend king with over 50 consecutive years of dividend increases, and that is Proctor Gamble, and they saw a pretty nice dividend hike for a company that's been increasing dividends for as long as they have at around 7%. So if we jump over to Seeking Alpha, we can see they're currently trading $155.25, and over the past year they've been up and down a little bit, but at this moment up around 3%, and year to date up around 6%. Now, like I just mentioned, this company has quite the history of increasing dividends over the past years. We can see 67 consecutive years of increasing dividend payments. Very impressive. So if we jump over to our dividend breakdown tab, let's go ahead and come up here and plug in stock ticker PG and hit enter. And again, we can see all this data will load in automatically thanks to ticker data. Now, the starting dividend yield for this company right now is sitting at 2.6%. So that's a decent starting dividend yield. We can see the payout ratio sitting at about 61% and free cash flow payout ratio sitting at about 65%. Now, for a company that's been increasing dividends for 67 consecutive years, that's really not a bad payout ratio. I think it's in a pretty healthy range as of right now. And if we look at the yearly dividends over the past decade, they've gone from $2.37 to $3.74, with the most recent hike putting them at $4.03. So again, pretty good history of increasing those dividend payments. Now, if we look at the 10-year dividend CAGR, we can see it at 4.76% and the 5-year sitting at 6.4%. So this most recent dividend hike at around 7% is a little bit higher than we've been seeing over the past few years. Now, if we come down here and look at the free cash flow versus dividends paid out chart, we have to keep in mind, again, dividends are paid out of free cash flow. So we want to see that the free cash flow generated each year is easily covering those dividend payments, and it looks like over the past decade that has definitely been the case. 2013, they generated around $10.8 billion in free cash flow, and they paid out around $6.5 billion in dividends, and in 2023, they generated around $13.7 billion in free cash flow and paid out around $9 billion in dividends. So again, over the past decade, those dividend payments have been completely covered by their free cash flow, and it looks like for the most part, the free cash flow payout ratio has stayed pretty close to around 60%, so we do like to see that consistency. Now, the one concern I do have for this company is the free cash flow is not necessarily growing at a high rate. Now, that's pretty normal for more mature companies, but even a 2.41% free cash flow CAGR, that's a little bit lower than I would like to see for any company that I'm investing in the 5-year, sitting at about 4.34%. Ideally, I'd like to see this a little bit higher, and I don't necessarily think Procter & Gamble is a company I'd consider adding to my portfolio right now. The fourth company that recently increased the amount it pays out in dividends is a real estate investment trust, and that is a REIT Realty, and they announced a small dividend hike of around 1.2%. Now, we need to take a step back and look at this company just a little bit closer. We can see over the past year, like most real estate investment trusts, they have been hit pretty hard, down around 16.17%, and year to date, down around 10.64%. Now, personally, I would argue they are a victim of the high interest rate environment right now. This is a company that has a starting dividend yield sitting at about 5.33%. Well, investors could easily get a risk-free 5% return with interest rates as of right now. And so as a result of this, a lot of investors are leaving REITs and going to safer investments. But here's the thing, this REIT has done a good job of increasing the amount it pays out in dividends over the past 10 and 5 years. Look at that 5-year dividend CAGR at 5.64% and the 10-year at 5.6%. So you do have to keep in mind, this would be a long-term play if you do choose to invest in this company. The amount they pay out in dividends is increasing every single year. And they actually had a change to the way they pay out dividends relatively recently. If we go over to the dividend history for this company and start to scroll down and zoom out just a little bit, it looks like they used to pay out dividends every single quarter, but in 2021, they moved to monthly dividend payments. So they now pay out dividends every single month, which is something I know a lot of investors get excited about. This doesn't necessarily make the dividend stock any better, but obviously we do love to see consistent cash flow coming in every single month. Now, we have to keep in mind, again, this is a real estate investment trust we're looking at. So for REITs, we don't really want to be looking at the payout ratio. This doesn't give an accurate representation of how safe those dividend payments are, because REITs are required by law to pay out 90% of their earnings in the form of dividends. So what do we need to be looking at? Well, the best metric to really look at is going to be your AFFO payout ratio. And if we scroll down, we can see the AFFO payout ratio forward looking for this company, sitting at 74.14%. So again, I think those dividend payments are pretty safe overall for ADC. And the last company we're going to be looking at that just increased their dividend payment is Phillips 66. This is stock ticker PSX, and they announced a 10% dividend increase. That's a pretty solid dividend increase. We jump over to Seeking Alpha, we can see this company is currently trading at $162.49 per share and have done very well over the past year, up around 53.25%, and year to date up around 22.04%. If we go ahead and jump over to the dividend breakdown tab, we'll come up here and plug in PSX and hit enter. And again, all this data will automatically load in thanks to ticker data. Now we can see the starting dividend yield for this company sitting at about 2.58%, and as of right now, the payout ratios look pretty healthy, sitting at about 26.83%, and the free cash flow payout ratio sitting at 40.82%. And if we look at the past decade, they've done a good job of increasing those dividend payments, going from $1.33 all the way to $4.20. Now, the 10-year dividend CAGR for this company is sitting at 8.31%, in the 5-year, sitting at a little bit lower at around 3.71%. Now, here's what we need to point out with this company. If we look at the free cash flow generated versus the dividends paid out, it's been pretty inconsistent for the most part. And if you remember, this is an oil/energy company, and look at this in 2020. They generated negative free cash flow of around $800 million. And if we go back over to Seeking Alpha and zoom out and look at the past 5 years, we can see 2020 was when this company was really struggling. They got all the way down to under $50 per share. So personally, as an investor, obviously I want to see consistently growing free cash flow. I don't like it when free cash flow is jumping around all the time. But here's the bright news. Despite negative free cash flow in 2020, they were still able to consistently increase the amount they paid out in dividends. And now if we look at the past 3 years, we can see free cash flow has easily been covering those dividend payments. In 2023, they generated around $4.6 billion in free cash flow and paid out around $1.8 billion in dividends. So there you go. Those are 5 different dividend paying companies that just recently announced dividend increases. Go ahead and let me know what you think of these companies in the comments down below. And like always, if you'd like to be able to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets, then you can head over to tickerdata.com at the link in the description. So with all of that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.